Elon Musk is venturing outside of Tesla auto sales to pay for his proposed transportation tunnels. Now, last week, he sold 20,000 flamethrowers. This week, Tesla has been marketing $546 million of bonds backed by leases of its Model X and Model S vehicles. Now, it's the company's inaugural auto ABS deal after charming buyers in the equity, convertible bond and junk debt markets. Well, demand for that is booming. Joining us now to discuss all of this is Bloomberg's bonds reporter. He's Alastair Marsh. Alastair, great to have you on the program. So first of all, does this success actually mean that Tesla's funding problems are behind them?
Well, not necessarily, because as Barclays has said, that the company will burn through $4.2 billion of cash this year alone as it tries to ramp up production for the mass market Model 3. So it's unlikely that a $550 million single bond deal will kind of get rid of those issues. However, the demand for these bonds was amazing. Quite spectacular. 14 times oversubscribed, as in the demand for the bonds was 14 times bigger than the supply. And so there's really an opportunity for Tesla to sell a lot more of these bonds.
So, Alastair, is Tesla the darling of the bond market?
Well, that's a funny idea, because Tesla has, obviously, with the big cash flow problems, that doesn't make it seem like a darling for bond investors. And it has had, last year it sold junk bonds in August that have actually traded below the issue price ever since, and even to this day are still below then. So there are investors do look at the name cautiously, but clearly in this instance there's been incredible demand. So perhaps they're turning the page, and there is. So
why so much demand? Can we pinpoint to a particular reason?
Well, I think there's the Elon Musk appeal. I mean, there's always that kind of his story, and Tesla being an interesting name that hasn't done that much in the credit markets, and therefore is sort of an interesting diversification, perhaps. But also the yields are quite good on the bonds. The lowest rated or the lowest rated tranche of the deal were offering 260 basis points above benchmark rate. So I mean, it's not enormous, but also not tiny as well. So I guess there's some appeal on that level too.